All right, we are live. Guys, in tonight's video, I'm going to be telling you about the top 5 best performing stocks in my portfolio in 2022. I'm so excited to get into it. But before we do, I want to welcome you to the very last Dividend Happy Hour of 2022. It is very hard to believe that this year has flown by so quickly, but they all do, guys. Anyway, welcome to the live stream. I'm so happy to have all of you guys here. We're going to do some shout outs here in just a moment. But real quick, let me know a couple things. Number one, how was the last trading week of 2022 for you guys? Were you up? Actually, how was the last day? Because today was the last trading day of the year. So how were you guys? How did you guys close out the year? Were you up? Were you down? Also, what did you buy this week? I'm very curious to know. So you guys put those in the live chat and in the comments below if you're watching the replay. And let's also do a quick cheers. Hey guys, cheers to a really good year. I hope it was a good year for you guys. But cheers to that, and I hope we have another in 2023. So cheers, and thank you guys for joining once again. I'm just sipping on a little coffee tonight after I hop off here in the next hour. Excuse me, after I hop off the stream, I'm going to head over to Chipotle, grab a burrito, and then I'm going to come back and wash it down with a couple margaritas. So I got to stay clean tonight. I have not been having margaritas on the live stream lately. It's kind of been nice just to have something like water or coffee. I'm definitely sharper when I just do that. But anyway, I'll pull up your guys' questions not questions. I'll pull up your comments in the live chat in just a moment. I do want to give a quick shout out. It's been a couple weeks since we've done this, but my friend ex-Dividend Dad hit a few really cool milestones in his portfolio this week. He says, I'm closing out the month of December with payments from Lockheed Martin and Broadcom. I received about $1,200 in dividends this month, making a new record for monthly income, which is unbelievable, guys. $1,200 just in 1 month. I cannot wait to get there. But he also says that brings me to $1,683 on the quarter, which is another record, and $4,866 for the year, which once again is another record. So, excuse me, year over year, that's a $2,000 increase in dividends. Ex-Dividend Dad, you're crushing it, my friend. Good work. And I will drink to that here. So one more sip of coffee. Hey. Okay, so let me go through the comments real quick. The live chat comments, see who's all here tonight. We got Steve in the house, Coach Tim, we got Charles, we got Chris, Kevin. Who else we got there? Paolo, good to see you. Ron, what's going on, Ron? We got Pat, we got CG. We've got TCAF in the building as well. We got Lucas, my man Lucas. Big Will. We got Shaping, Ultra Runner. Suzuki Man, Phil. Who else we got? Logan, Low for Show. Phildo the Great. Did I already say what's up to Ron? If not, Ron, how you doing? KC's in the building. We've got Kevin Burgess. What's going on, my friend? Carl. Good to see you, Carl, and Caleb's here as well. Harris, Leroy, and then Pizza Pro. Oh, we also got Darren and Anthony. What's going on, everyone? Thank you guys so much for joining. We are up to 75 people in the stream, and in case you're just now joining, welcome. So happy to have you in tonight's Dividend Happy Hour to close out 2022. So tonight we're talking about the top 5 best performing stocks in my portfolio, and we'll get into that in just a moment. I think there's one other thing I forgot to mention. I got to pull up some of your comments here, see what you guys picked up this week and how your weeks all went. So let's see here. See if I can pull up some of your guys' comments. So I see a couple of you guys drinking coffee out there as well. Thought I was crazy doing this at 5 o'clock p.m., but sometimes it's nice. Like, I don't know if you guys get this too, you coffee drinkers. Sometimes, like, it's nice just to, especially after dinner, just wind down with a cup of coffee. Usually, I mean, decaf would be ideal, right? Sometimes you don't have decaf, though, and you gotta take a risk and go with the caffeinated stuff. So Carl picked up some Sun, some tea, and some Leggett in Platt this week. Nice. Good pickups. Harris picked up some Waste Management and Target. Very nice. Old Reliables right there. Speaking of Old Reliables, Leroy picked up a couple more shares of SCHD to close out the year. Man, great way to end the year. TCAF picked up some JEPY as well as MPW. He opened up his MPW position just about a week ago. Yeah, great time to buy MPW. Definitely, like, that stock just keeps getting cheaper and cheaper. It's pretty unbelievable. My man Pizza picked up some Kroger. Gosh, I'm jealous of you, man. Picked up some Kroger and SCHD. Jay picked up some, here we go, SCHD and Cisco. And I see some of you guys saying, what's up? Hi, Tech, how you doing? Rex, Danix. Oh, Danix says Altria is the best stock right now. We're not going to be talking about Altria tonight, unfortunately. Maybe we can later, but it's not on my list. Nick, what's going on, man? On paternity leave until February, so I can actually make the lives. Man, congratulations on the baby as well. That's incredible, man. Very cool stuff. Let's see here. A couple more. I'll put a couple more on the screen before we get into the main event. Lucas picked up, finally pulled the trigger on Intel with 2 shares. Good stuff. Good stuff. I mean, let's see how it goes these next couple of years. I'm really pulling for Intel. Amadou picked up some Target and Stanley Black & Decker, as well as some Leggett & Platt. Logan has been buying a lot of MPW and SCHD, as well as Ares Capital. Nice. Let's see. Yeah, it's pretty good. Coach Tim picked up some Comcast. And dang, Ultra Runner with a heavy contribution in December. Added another $7,000 to his portfolio. Picked up a good amount of stocks that I am not familiar with except for SCHD and Intel. So good stuff there, man. Good stuff. Let's see. And then Journeyman started a new position in Target today. Man, a lot of you guys starting new positions this week. That's very cool. No, I won't say it. I can't do it. I can't. I've got some news for you guys, but I'm not going to spoil it. You're gonna have to watch Sunday's video. That's all I'm going to say. Okay, so how about we get into the main event, right? We're going to talk about the top 5 stocks, my top 5 best performing stocks. The top 5 best performing stocks in my portfolio in 2022. Now, these are the ones, they're not the best performer. Well, they're not the stocks that I have the most gains on. Necessarily, they're more so just the ones that saw the best share price performance in my portfolio this year. And number 5, the one we're going to be starting with is, Coca-Cola, who year to date is up 8%, which puts my portfolio, which I have about 23.2 shares of Coca-Cola, puts my position up about 23.5%. So my Coca-Cola is doing pretty dang well, if I do say so myself. But Coca-Cola is not really a big position in my portfolio, unfortunately. It makes up about 3.5% of my overall portfolio, which definitely pales in comparison to others like Johnson & Johnson or Chevron or Lowe's, which is actually getting up there, 6%. Or even these two right here, Procter & Gamble and Starbucks, which are my biggest 2 positions. I'm really happy to see Procter & Gamble finally in the top 5. I've been working hard for that one. But anyway, just taking a quick look at Coca-Cola's dividend stats, which I'm sure most of you guys are pretty familiar with, but for those of you who are not, we'll do a quick dive into it. They have a decent starting yield, 2.75%, which is pretty average. Their payout ratio is a bit on the high end, 70%, but this company is a dividend king with 60 years of dividend growth. And is, if I remember correctly, we'll take a look. I believe that payout ratio is pretty standard for Coca-Cola. If this will load on Seeking Alpha, excuse me, guys, I don't know why it's glitching out. If it doesn't load in a second, we'll move on. Okay, there it goes. Sorry about that, guys. Let's scroll down. We're going to take a look at the payout ratio history. So, I mean, as you guys can see, it's kind of been all over the place. 10 years ago, it was about 50% in the 50s. Then starting at about 2014, it bumped up to the 70-ish range and even higher from there. And it's since come back down to where it's at now, right? So in the 70%. So that's really not anything too crazy. And like I said, 60 years of dividend growth. So, they know more or less how to manage that dividend. So I'm not too concerned about it. But that's the 5th best performing stock in my portfolio. And now let's move on to number 4, guys, which is Enterprise Products Partners, ticker symbol EPD, which is one of the highest yielding stocks in my portfolio, which we'll see in just a moment. But year to date, EPD is up about 10%. Which actually 10.5%, which is pretty unbelievable because this company is not really known for their share price appreciation because they have such a high yield. The returns that you're going to get from a stock like EPD are going to come more so in the form of dividend income and cash flow. But hey, I'll take like a 10% gain if they want to give it over to me. But going back to this, guys, that leaves my position up about 7.2%, which is not too shabby. Now let's go back over to my dividend portfolio tracking spreadsheet right here, which, by the way, guys, we're looking at the diversification page here. This is, I mean, you guys are pretty familiar with my spreadsheet at this point, but for those of you who are just now seeing this for the first time, let me zoom out a little bit. This breaks down, I mean, there's more diversification stats to look at by income and by sector, all that jazz. You guys can grab this spreadsheet for free. There's a link to it in the description of this video. I definitely hope you check it out and get some good use out of it, but let's zoom back in here. What were we at, 110? Let's zoom back in here and take, take a look at my EPD position. So this is a little bit higher allocation than Coca-Cola. EPD is sitting at 4.3% of my total portfolio, which is not too bad. And it is one of my portfolio's highest income generating stocks. And I don't know, yeah, it's not going to show me exactly how much because it's having trouble loading that data right now. But EPD brings in well over $100 for me in annual dividend income, which is pretty dang sweet. And like I said, they're a very high yielding stock. As we can see right here, they have a forward yield of 7.84%. And they have a pretty extensive history of growing this dividend as well. 23 straight years, and they will, I would be very surprised if they did not become a dividend aristocrat here in the next couple of years. And then as kind of a trade-off of that high yield, they don't really have much to offer in terms of dividend growth. And that's pretty common, guys. We'll see this a lot. When a stock has a high starting dividend yield, you're not usually going to see like a high growth rate along with that. It's usually one or the other. Low yield with high growth, or average yield with high growth, or high yield with low growth. Now, there is one exception to this, and that's Altria Group, which I believe is the triple threat. It is a triple threat dividend stock because they have a high yield above 8%, okay? They've got a high-ish dividend growth rate, also above 8%, I believe. And then they have a pretty extensive dividend growth history. They're a dividend king, I believe, with 53 years of straight growth. So Altria Group has got it going on. But anyway, that's the fourth best performing stock in my portfolio this year. And we are going to jump over to the third here in just a moment. Give me one sec, guys. Let me get it all situated here. So, okay, we're going over here now. So the third best performing stock in my portfolio is going to be AbbVie, guys. AbbVie, who year to date is up 20%. And it seems like there's no stopping AbbVie. Ever since I bought into this position, which I don't know when it was, sometime in 2021, man, they've just really taken off. And as you can see at the bottom of the screenshot there, my position is up 41.5%. So AbbVie's doing really well for me. And this also is really not like a super big position in my portfolio. If we go over here, AbbVie's about 3.97%. And this is kind of true with Coca-Cola as well. I'd like to make both of those bigger positions in my portfolio, increase the allocation, but they've just run up so much in share price. And there's too many other good deals right now that it's like, I don't know if I can justify putting money into either of those two when I can just buy other more affordable stocks. So that's kind of how I'm looking at it. But anyway, let's take a look at AbbVie's dividend stats real quick, guys. Going back over to the screen, we're going to jump back over to Seeking Alpha, and we can see here that AbbVie's yield is not too shabby, 3.64%. It used to be above 4%. I remember when I first started buying this company, it was decently above 4%. And I believe this 3.64% is a bit lower than their 5-year average dividend yield. If Seeking Alpha will load for us. I don't know why it's being sleepy tonight. So yeah, I mean, as we can see, here's the forward dividend yield, 3.64%, but their 5-year average is 4.6. So AbbVie usually is a higher yielding stock, and its current yield is about 21% lower than the 5-year average. And I'll tell you what, if this stock goes down in share price at all and gets back above 4%, I'll likely add to this position. And the rest of the dividend stats look really good as well. You know, I guess this is not necessarily a triple threat dividend stock, but this also does go against the rule of thumb I said a minute ago, where it's usually low yield, high growth, high yield, low growth, because AbbVie's got it going on, had it going on in both departments, right? So if that was above 4%, high yield, and then they'd have a very high growth along with that. 17.26% for the 5-year growth rate. Pretty unbelievable. And the payout ratio is pretty low as well, 42%. Excuse me, guys. And then their dividend growth history is not too bad either, 9 consecutive years. Now, with that, let's go over to this is the second best performing dividend stock in my portfolio. You guys ready for it? I don't think you're ready for it. In fact, I think you're going to be surprised to find what it is. Well, probably not, because you can see it at the top of the screen, okay? Gosh, Ryan, you are a silly goose. So the second best performing stock in my portfolio is AT&T, who, believe it or not, is up 31.5% for the year, which I'm so glad, because prior to this tremendous run-up in share price, AT&T was like one of the worst performing stocks in my portfolio, and it's still not doing too hot. I mean, my position's down 15%, so, you know, it's not too great, but this is not nearly as low as my Verizon position is. My Verizon position, I think, is down like 26 or 27%, guys, down quite a bit more. And just kind of like all the other stocks we've seen so far, AbbVie, AT&T is not one of my bigger positions. It used to be. It used to be like one of the top 5 positions in my portfolio, but because I've just spent so much time and energy in other positions, AT&T has come down to be about 4.5%, which is totally fine by me. And Verizon's about the same, 4.22%. So not too shabby there. And taking a look at AT&T's dividend stats, I mean, I know, and you guys know this too, they went through a pretty massive dividend cut earlier this year. But still, you know, it's sitting at a 6.02% forward dividend yield, which in its own right is pretty dang high. And the payout ratios come down a bit too, just under 50%. So I like where this is. And, you know, the growth history is 0 years, but they have a pretty nice record of at least paying that dividend. If they would not have cut the dividend earlier this year, I think they would have been maybe they would have been an excuse me. Maybe they would have been a dividend aristocrat, but prior to 2022, they had a pretty nice, like this slope upward is pretty nice. So there was definitely some consistent growth there, and hopefully they'll get back to it. You know, we'll see what happens with AT&T, but I'm really, really hoping that they can bring back this consistent dividend growth, because that's like obviously a huge draw to investing in a company like AT&T. Pretty much everyone buys it, not for its share price appreciation, which I think this year is a total anomaly. It's more so for the cash flow, very much like EPD. But anyway, guys, moving on to the best performing stock in my portfolio. You guys already know what it is because it's there at the top of the screen, but just doing the reveal there, it's Chevron, which is probably no surprise, okay? And year-to-date, Chevron is up nearly 52%. Wow. Unbelievable. Now, while all 3 major indices, the S&P, the Dow Jones, and the NASDAQ, all were down in the red, I think the NASDAQ maybe was down 30+% for the year. I think the Dow Jones was down maybe 6 or 7%, and then S&P somewhere in the teens, I believe. So while all that was going on, Chevron's up 52%, a whopping 52%. And my position, and guys, Chevron is the best performing stock in my portfolio for sure. I mean, just as far as my total return with this company right now, just across all my holdings, Chevron's crushing it. A 92% gain in my portfolio. I'm up over $1,100. It's getting very tempting to lock in some of these gains, but I don't know. I don't know what to do. I know some of you guys who have owned companies like Chevron or ExxonMobil have done that, and I don't know. It's definitely something worth considering. I'm not exactly sure why I haven't done that. I guess I don't have a good argument not to, especially because I just sold Lockheed Martin. But anyway, getting into Chevron's dividend stats real quick. These are looking pretty good. Their forward dividend yield is 3.2%. Nothing crazy, but they do have a very low payout ratio, which is nice. 32% with an average 5-year growth rate, 5.6%, but a very extensive dividend growth history. They've been growing this bad boy for 35 straight years, making Chevron a dividend aristocrat. And if this stock comes back down in share price, which I do think it will at some point, which also like adds to the point, like if that's true, why wouldn't you just lock in some of those gains while you can? But if and when this stock does come back down in share price, I will be adding more to that position for sure. But anyway, guys, those are the top 5 best performing stocks in my portfolio. It's kind of fun to go through. And now I want to put it back on you guys in the live chat and also in the comments below. Let me know, what are some of the best performing stocks in your portfolio? I want to share some of those on the screen once you guys submit those. But go ahead and do that. And I'm going to go through some of these comments, see what I can pull up on the screen here. And also take a sip. But real quick, guys, if you have not done so already and you're enjoying this dividend happy hour hanging out with me tonight, please don't forget to hit the thumbs up on this video. And also, you know, if you like what we've got going on here, then hit that subscribe button as well, because we're coming back every single week. We did it all in 2022. We're going to be coming back even stronger in 2023. And when I say we, I mean myself and you know, all you hooligans who come tune in every single Friday night. So, anyway, let's see what your guys' best performers are. I see some of you guys submitted these 10 minutes ago. Okay. So I see TCAF. His best performers are Verizon, Coca-Cola. That's cool that we have that one in common. Chevron, we also have that in common. ExxonMobil and Energy Transfer. Very nice. Let's see here. Let me see what else you guys got going on here. Such a silly goose. The silliest goose, you guys. I know. Don't I know it? That's why you love me though, right? Let's see. See what else you guys got. I want to get to your guys' top fives. I'm now catching up. Okay, here we go. Nieces and nephews, top five. AbbVie, very nice. Pepsi, great. Vichy, Coca-Cola, and Lowe's. Love it. Very, very nice. I'll be talking about Lowe's a little bit in my Sunday video, so definitely check that out. Man, I thought more of you guys would be telling me your top five best performers. So, oh, did I say Verizon a moment ago with that? My bad, man. Yeah, I know. V is Visa. I'm just, like I said, I'm a silly goose. See, there's no telling what's going to come out of my mouth. And also, too, it's important for you guys to know, if you haven't learned already, there's a slight disconnect between this and this. So, sometimes things don't come out quite the way they should. Let's see. So Phildo the Great says, ExxonMobil is my best performer. Too bad I only own 2 shares. I feel your pain, my friend. James here, SCHD is my best performer. Very nice. Love that. Kevin, EOG, Chevron, AbbVie, and Lockheed Martin are his best performers. Love it. Let's see. Amadou. Big Bad Amadou. Coca-Cola, EPD, and AbbVie. Man, we have 3 in common right there. That's very cool. And then Chris here says HRB over 56%, Vichy over 14%. Nice, man. That's solid. And then the Anderson JC67, ASTL, and MPW. And then Lucas here, one more submission. Starbucks in Target did well, but I sold it. The rest are in the red. That's okay, man. You've got an opportunity to average down. Nothing wrong with that at all. Okay, so now I think that was pretty much all the submissions here. So I guess with that, guys, Casey put hers in. I got to put that up. Best single stock for me was STEM. Bought at $6.55, sold at $14.10 after 3 months. Wow, nice return. Ron here, best performers SCHD, AT&T, and Beatrice. And we got Kevin, CAH. What's CAH? Let me look that one up. I know it's not Cardinal Health, right? Oh, it is. Okay. I was going to say, I know that ticker symbol, and I know I've talked about Cardinal Health before too. I just, like I said, I couldn't connect the dots up here. Charles, AbbVie, Chevron, Coca-Cola, and UVV. Nice, we've got a few in common there. And then Harsha, absolutely Gilead. Wow. Very nice. Cool. So let me actually go back up in the comments. Now let's get through some of the Q&A, guys. Now the fun really starts, okay? Also, real quick here, Charles, it looks like you're sick, my friend. I hope you get well soon. Be doing some NyQuil and chill tonight. Okay. All right, guys. So I just kind of a disclaimer. I scrolled all the way up to the top of the comments, so I'm just gonna start pulling up some questions on the screen here that you guys have. So. I think there was one other question I wanted to ask you guys. It'll come to me in a second. Oh, actually, yeah, I do have one, and I'll come back to this after I pull up some questions here. But I wanted to ask you guys, what is going to be the first stock you buy in 2023? I might put out a community post and ask the same thing. But while I have you guys here, what is the first stock you plan to buy in the new year? I can tell you what mine is, but it's going to spoil a lot of things, so I got to keep it under wraps. Let's see. Man, we have 140 people in the stream right now. Guys, and with that said, let me take this opportunity to thank all of you guys for tuning in with me tonight. December 30th, Friday night. I'm sure there are many more interesting things you could be doing than talking dividend stocks with me, so I really appreciate you guys spending this time. It's always fun hanging out with you guys here for these. I really I know I say this every week, but I really look forward to doing these dividend happy hours every week. It's just so much fun. Okay, man. And my goal too, guys, this has been bad the last couple weeks. My goal is to not get too far behind in the comments. Okay, this is actually a really good one. So Andrew wants to know, how many shares would you need to make $100 a week in Coca-Cola? So, okay, $100 a week is $5,200 a year. Okay, we're going to do some math. Bear with me. And let's go see, and Andrew, pay attention because I'm going to show you how to do this calculation, okay? So let's go back over to Coca-Cola real quick. So basically what you do, okay, by the dividend yield, right? So all you need to do, Andrew, is you need to take the number that you want, so in a year, so $100 a week, is $5,200 a year. Divide that by the dividend yield, which is 2.75%, divided by 2.75%. You would have to have this number right here. Hopefully it'll show you. Can you see that? You can't really see that, huh? Okay, there we go. $189,090 to be making $5,200 a year, or $100 a week in Coca-Cola. Not too bad. Is that what you asked? Oh, how many shares? My bad. I kind of misread the question. But it looks like Casey got you covered here. 29.55. Okay, let's keep going here. Also, what are you guys doing for New Year's? You guys have any big plans? You gonna stay up till midnight? What do you guys got going on? Okay, let's see. Caleb, what's your opinion on Verizon? Pretty cheap now. It is pretty cheap. It is pretty cheap. So Verizon has had a pretty bad year just in terms of performance. Let's go take a quick look for our friend Caleb here. So Verizon's currently sitting at $39.40 per share. They are down about 25% for the year. And most of these losses have really come here in the last half of the year. And I think right around here, they had a pretty poor earnings report, quarterly earnings report, Ryan, get it right. And from there, it just became chaotic. It was just not good for Verizon. And so they really tumbled down in share price. But, you know, if we're talking a long period of time, I feel good about Verizon. I personally have it in my portfolio. And during that period when it was coming down in share price, I was averaging down and picking up some shares. So throughout the last 6 months, I think I added 10 to 15 shares to my Verizon position. So I was nibbling away at it. And, you know, it's, yeah, I don't know. I think it's and obviously you'll hear so many people say this about companies like Verizon and T-Mobile and AT&T. It's the debt, okay? It's a very capital intensive business, but at the same time, because of that, it's harder for competitors to come into this space because it takes so much money to get in. So having said that, it's likely going to be, unless there's some consolidation or some more splitting apart, there's going to be those big three: T-Mobile, AT&T, and Verizon. You know, and actually, out of those three, T-Mobile has really gained steam. They've really done a good job of building up their business these last handful of years. The only downside to T-Mobile is that they don't pay a dividend. At least in my eyes, that's a downside. But if you look at their share price performance, it's just crushing it. And if you were to buy Verizon, I think there's a couple things you need to know. I mean, first of all, if you are going to buy it, I mean, now's not too terrible of a time because it's so down in share price. But at the same time, keep in mind it's not likely to be one that's going to it's kind of similar to what I was saying with EPD earlier. It's not going to be one that is going to see a lot of share price appreciation. You're more so going to be getting a cash flow return. That's where most of your return is going to be from Verizon. So definitely something to keep in mind. But they do have 18 years of consecutive dividend growth, so there is some consistency in growing that dividend. Okay. Let's keep going. Good question. Okay, I think this was I think right here, right about where I'm at is when I asked, like, what's the first stock you guys are going to buy? So I'm going to put some of those up. Harsha, the first stock Harsha is going to buy in 2023 is AT&T. Okay, the Anderson says Intel will be my best dividend stock in the future as I bought 500 shares. Wow, my friend, that is quite the Intel position. But hey, if you're going to buy it, it's like, now's not a bad time to do it. You know, it's definitely a better price than it was 6 months ago, better than it was 3 months ago, even 1 month ago. Intel's just can't catch a break. It'll be very interesting to see what happens with that stock. And like I said, if you're going to buy it, now's the time to do it. And if it makes any of you guys feel any better who are buying into Intel, not feeling too great about it, my average cost is like in the mid 40s. So I've definitely taken an L on Intel. A dank. APD has been his awesome stock. Sadly, it's taken a tumble. That's okay. Then Steve is going to be adding some Starbucks. And oh, wait, maybe this is a different question. Maybe that is. I think so. Okay. Yeah, I was a little bit behind. Sorry, guys. Okay, this is a good question. So, why is it not a good idea to drip JEPY for quick snowball? Who said it wasn't I don't know. I think I would need more context behind that situation, but I don't know. I've never heard anyone say that it's not a good idea to drip JEPY for a quick snowball. JEPY is it's obviously a very high yielding dividend stock, and I know there's a handful of people probably here in the live chat. I know there's a handful of investors who they buy into JEPY and then they use the dividends because it's such a it's easy to build up how do I say this? It's easy to generate a lot of cash flow from JEPY every month because number one, it is a monthly payer, but also number two, because it is such a high yielder. So what a lot of people do is they'll build up some JEPY and then take that monthly income, reallocate it into other funds that they want to build up. So they're taking advantage of that high yield from JEPY to put into other positions. But I don't know that it's not a good idea to drip JEPY and just reinvest that back into the position if you want to build up more JEPY, just like any other share or any other stock. I don't know. Okay, let's keep going. Okay, Tara wants to know, have you looked at BST? Isn't that Blackstone, some sort of Blackstone something or other? Yeah, it is. So let's pull it up on the screen real quick. I really don't know a lot about it. I have heard of it, but let's take a quick look. So BST is the BlackRock Science and, I said Blackstone. BlackRock Science and Technology Trust. Let's take a look at their holdings. I mean, it didn't look like they were performing too well this year, but these holdings, the ones I know at least, are pretty solid. Apple, Microsoft, MasterCard, Visa, Tesla's in here, Alphabet, and then it looks like in total there's about 500 different holdings in BST, and then the top 10 make up about 30% of the entire portfolio. So it is definitely very heavily weighted in these top 10, which I guess isn't bad if you want that exposure to all these. But there's some of these that I don't personally know, like Project Shopping Series, Cadence Design Systems, Wolfspeed, ASML Holding. I have no idea what those companies are. So if it was me personally, like I don't know, I wouldn't want, if I was going to be investing into an ETF like that, I wouldn't want to. I'd want to do some more research into those top 10 just to make sure I'd want to have exposure to those, especially considering how much of that fund that they make up. Let's go back to BST though, because I didn't look at their dividend stats or anything like that. I did briefly see that they were down like 42% in the last year, but that's about it. And the dividend stats actually look really good. 10.7% yield with a very nice growth rate, 18.5%. Wow. 6 years of dividend growth. That's pretty unbelievable, actually. Huh. And I'm guessing the high dividend growth rate has to do with these right here. I don't know if they're special dividends or what's going on, but without these, we would not be seeing as high of a dividend growth rate. So, maybe that there's a caveat or an asterisk that should be attached to that dividend growth rate. Anyway, let's keep going on. Oops. I almost closed out of the screen. That would not have been good. Let's keep going. Okay, so now I'm at the point where I asked you guys what the first stock you're going to buy in 2023 will be. So James, the first stocks James is going to buy is Costco. Driving America will buy either Intel or Tyson Foods, both very discounted. While Invest will be buying some VT Sachs for the good old Roth. Pat will be picking up some EPD and MPW. My man Ian picking up some great stocks, Union Pacific and Pepsi. And then TCAP, just depending on what happens, how the start of the year goes, either Google, MPW, or SCHD. Some other really good ones in here. Okay, this is another, this is back to JEPY. It has seen bull and bear market. Do you think it is a safe stock for the long term? Also, why do you... Okay, so I answered the quick snowball one. Tried to, at least. I think it's too soon to say whether or not it's going to be a safe stock for the long term, because JEPY's only been around since 2020, which is really not a long period of time. So, I think we're just going to have to see how it plays out. I'm pretty happy with how it's held up this year, especially in comparison to the other covered call ETFs out there. It is by far outperforming XYLD and QYLD for sure. And I actually do believe it's outperforming all three major indices for the year. So, that's pretty good. It's seeing less of a drawdown than the entire market as a whole. So it is nice to have that preservation, some preservation, along with that nice high monthly dividend. But as far as what's going to happen with JEPY across a long period of time, let's just see. I know personally, I'm not planning to have a huge allocation of JEPY in my portfolio. I did buy 5 more shares in December. But yeah, it's just one of those I don't plan to make a big holding in my portfolio. So I would say tread lightly with JEPY. If you're, if you're just starting out, if you're kind of newer to dividend investing, I think that there's better. I think there's better places you should put your money starting out. Like if you're, how do I say this? JEPY is enticing because of its high yield for sure, but I think you need to. I think you'd be putting the cart before the horse buying JEPY if you weren't already invested in something like an SCHD or a VTI or a VU or other, like a portfolio of other dividend stocks that are more safe and secure, like the Pepsis, Coca-Colas, Procter & Gamble's, Chevron, kind of some of those bigger blue chip Apples, Microsofts, those sort of things. I think you should look at those for your portfolio first before you even consider something like JEPY. And furthermore, if you are considering something like JEPY, please definitely take the time to familiarize yourself with their strategy and with their approach, because there are some complex things going on under the hood of this ETF that definitely should be paid attention to if you're going to be considering putting money into it. So, you got to walk before you can run. Sorry, I'm still on this. You got to walk before you can run, and with JEPY, it's like, man, if you're jogging at least, you might be getting close to galloping by investing in JEPY. So, I don't know. Let's see. Phildo, big plans for 2023. Take a nap. Man, that sounds good to me, my friend. Let's see here. This is another good question from High Tech. What is the best dividend stock to start buying in 2023 if you were to start a new position? Well, I don't know about best, but I know there's definitely some cheap ones out there right now, some ones that look to be at pretty low valuations. And I covered a few of them in a video last Sunday. And I don't remember all 5. There were 5 there. I don't remember all 5 off the top of my head. But Tyson Foods was one of them. MPW was another one. Kroger was a third one. And you guys might have to help me out with the last 2. I had a ton of other good ideas in that video, though. I think something like Apple, too, is looking pretty good. That stock, just taking a quick look, they've actually dropped quite a bit in 2022. So they were down nearly 30% for the year, which is nice. And at their peak, they were up at about $175 per share, $180 per share actually back in March. And if we zoom out across the 5-year period, was that their actual peak? About $180 per share? Yeah. So they're quite a ways off of their peak, and actually they're sitting at a near 52-week low. And for a company like this, the PE ratio is really not too bad. Like pretty soon, if it keeps going in the same direction it has been, the PE ratio will be under 20, which for Apple, like is really good. You'd be hard pressed to find Apple under a 20 PE ratio at most other times. So let's see. So this is a good one. So Patel wants to know thoughts on Tyson, Scott's Miracle-Gro, and Newt. I don't know Newt. We'll take a quick look at it. But Tyson Foods, love it. That one's currently sitting on my watch list, actually. And yeah, in January, I'm going to be spending some more time with it. But I'm definitely chewing on the idea. I like that company, and I also like the food they make. I've talked about this before, but their frozen air-fried chicken nuggets, like, oh my gosh, like they're a game changer. Scott's Miracle-Gro. It's funny. We were in the Discord group earlier today. We were briefly talking about that one. Which, by the way, if you guys are not in the Discord group yet, the Drip and Sip Discord group, it's free to join. There's a link to it in the description of this video. Just click the link. It'll take you right into the group. Great community of other dividend investors. I know a handful of people in this stream are in that Discord group. Very active members of the Discord group. And we'd all love to have you join it. So definitely consider joining the Discord group. Link in description. But taking a quick look at Scott's Miracle-Gro, I was talking about this stock at some point early in 2022, and this is like one example of why you guys shouldn't listen to me because, or at least take what I say with a grain of salt because when I first started talking about it, it was up over $100 per share. It was like probably somewhere in here actually, 120, 130, maybe even in the teens or low hundreds. But I mean, as you can see, like since then, actually just even from looking at the share price chart, it's trending down pretty aggressively. And now it's sitting at under $50 per share. So it's definitely come down quite a bit. And in terms of valuation, it's about 35% lower. The forward PE ratio of 13 is about 35% lower than the sector or than the 5-year average, excuse me. So Scott's Miracle-Gro in general is looking a lot cheaper than it has been, and the dividend stats are looking pretty decent as well. They've got a yield in the mid-5s, I believe, and their growth history, I believe, is in the teens, like getting close to 20 years, if I remember correctly. It's either 8 years or 18 years, somewhere in there. But debt is a big issue for Scott's Miracle-Gro. The financials, I really wanted to like this company better than I did, but the financials, I couldn't get past it. But I will say that in that industry, in the lawn and garden industry, you can't beat Scott's Miracle-Gro. They're like the Coca-Cola of lawn and garden, basically. So I do think they have a really strong brand. But like I said, just in general, the financials are not there for me right now. But, I want to keep SMG in the back of my mind because I think there's some potential there at some point. Okay, so Steve wants to know, can you look up RCII on Seeking Alpha? Yeah, let's take a quick look real quick. I don't think I know this company, but let's see what's going on. You want to see the ratings, okay? See what the analysts have to say. So, Rent-A-Center, right, okay. Let's just take a look at the Wall Street analyst rating because that'll show us the price target. So, okay, so Rent-A-Center currently sitting at $22.55 per share. It has a low price target of $23, which is still above its current share price, so upside there. High price target of $43, which is about double where it's at now, and an average price target of $30.75, which represents about a 36.3% upside. So that's not too shabby. Never actually looked at Rent-A-Center. Did I not put it on the screen? I apologize, Steve, if I didn't put it on the screen. Let me do this, and I'll zoom in here so you can take a better look. 43 for the high, 30.75 for average, 23 for the low, 36% upside on the average. But let me just take a quick look at the financials because I've never looked at this company. So this is a bit concerning, I would say right here. Can you guys see this? Yeah, you can see this. The revenue. Oops. Oh, slow down. Whoa, Nelly. So the revenue is trending in a pretty bad direction, if I do say so myself. 2021, obviously, they had a huge jump, but that seems to be an anomaly compared to the previous 10 years where the revenue was trending down. And like that in itself is pretty bad. I think one must have, if you're going to be looking at, for the most part, there might be some exceptions actually, but for the most part, I think the companies you're looking at should have growing revenue. I think that definitely should be something you look for. and it's not there with Rent-A-Center. So I mean, personally, for me, if it was me just looking at the stock for my own portfolio, I don't know. I don't even think I'd consider it beyond that. So Tara brings up an interesting point about Verizon. They have limited growth. They have limited growth, but at the same time, and you see this with a lot of utilities, speaking of stagnant revenue, it's steady though. And for a company like Verizon and for utilities, that's why I'm saying there's some exceptions to the revenue thing I was just talking about. Steady is fine. For a lot of utility companies, like if we go look at Southern Company right now, which we will, take a look at their financials. It's slightly trending upward, right? But for the most part, it's very steady. Okay, there's not much movement here. But for a company like this, I think it's more acceptable. You don't need to see super big, super big growth in the top and bottom line every year. You're really looking for more stability. And furthermore, having said that, like one of the reasons you buy into utility companies too is because they are so steady and will pay that reliable cash flow. Yeah, so I think something like Southern Company is a good example. And then, I think Verizon, AT&T, we can almost look at the same way. It's almost like a utility in its own right because, people, gosh, why am I not putting this on the screen? I'm so sorry, guys. Let me go back to Southern Company and show you real quick. So, just looking at the revenue, it's going up a little bit, but it's just more than anything, it's hanging in there. It's staying very steady, which is fine. I mean, people are not going to not pay their electricity bills. People are not going to pay their, they want to keep the lights on, I guess, long story short. And Verizon's the same thing. Like, they're not going to not pay their phone bills. Sometimes, like we saw with AT&T, there is a slight delay. Like maybe their customers get behind a couple of days on average. But for the most part, like something steady like this is fine. And, I think you're right. Like, let me pull your comment back up. I think you're right. There is limited growth. And I think maybe Verizon was another company that I talked about in this video last week. But, I think you have to remember what are you looking for in an investment? Are you looking for something that's going to, okay, excuse me, I'm about to go on a tangent, but are you looking for something that's going to deliver more share price returns? Or are you more so looking for something that's going to give you steady dividend income? Now, both of these things combined, these are the two components to total return: share price growth and dividend income. You add those together to get a total return. And you, as the investor, need to decide where you want the majority of that total return to come from. What are you looking for? Are you looking for something that's going to grow in share price? Are you looking for something that's going to be dividend income? Are you looking for like a steady mix between the two? And depending on what you're looking at, Verizon might have a place in your portfolio. Depending on what you're looking at as well. On the other hand, it might not, and that's fine. Every portfolio is different. Every investor is looking for different things. And, Verizon's certainly an acquired taste, as is other cash flowing stocks like AT&T or EPD or Altria Group. And on the other hand, like that's why some people don't want to invest in a stock like Apple or Microsoft or Costco, because although the share price returns are nice, that's not what they're looking for necessarily. They're looking for more cash flow, and something with less than a 1% yield just isn't going to tickle their fancy, which is understandable. So, and that's not right or wrong either. It's just a matter of preference. Oh yeah, I love this question. Okay. Are there any financial books you plan to read in 2023? There are. Gosh, I wish I had it. I wish I had it with me. I've got a couple books right here. Hang tight. So, and I actually wanted to show you guys this. I got a few really good books for Christmas. I got Poor Charlie's Almanac, which is in the other room. I've already cracked that open. I'm like 100 pages into it. Show you a couple other books I got. So I also got, and I'm also reading a book right now called House of Morgan, which is about the JP Morgan banking dynasty, pretty much since its inception all the way up until, which was like in the late 1800s, but all the way up until like the 1980s or 90s. So it covers a really long period of time. But In addition to Poor Charlie's Almanac, the 3 books that I got for Christmas was this one right here, Ways and Means by Roger Lowenstein, who wrote a Warren Buffett biography that I just recently read, and I really like that. Excuse me. And I'm getting really into history, so I wanted to check out this other book by him, which is about Lincoln and his cabinet and the financing of the Civil War. So I'm very interested to read that. Kind of a financial book, I would say. This other one, not necessarily financial, but Ben Franklin, you know, he actually, fun fact about, Ben Franklin actually was he was pretty big into finances. He actually retired at 42. I read about this in Poor Charlie's Almanac. He retired at age 42 so he could spend more time learning and inventing and doing more with philanthropy and all the other stuff he did, founding countries. And I don't know, I thought that was really cool. And I think that's also something that a lot of us are aspiring to as well. Retiring early, not just to sit around and, you know, watch TV all day, but just to spend more time doing maybe more meaningful things. So I think after I finish Poor Charlie's Almanac and after I finish the House of Morgan book, I'm gonna break into this bad boy. Now, this next book is a straight up financial book. This is the Little Book of Valuation by Aswath Damodaran, Professor Damodaran, who is the Dean of Valuation at NYU, I believe. I don't think it says it on here. But Professor Damodaran, I know Russ is a big fan of him, and I am as well. He has a pretty solid YouTube channel where he pretty much puts all of his lectures and his curriculum on YouTube for free. So if you guys want to learn about how to value stocks and you know, just become a better investor, I would definitely check that out. Oh, and I also got this other book. Sorry, guys, I forgot about this one. This one is, and I'm gonna, as I go through all these too, I'm gonna put them on my website because I do have a reading list on my website just of recommended books and what I thought about them. But this next book is The Great Minds of Investing by William Green. It's in a sleeve here, which I'll kind of take it out. See, The Great Minds of Investing. And William Green, for those of you who don't know, wrote another book which is like one of my favorite investing books called Richer, Wiser, Happier. I highly recommend you guys check that out. And he also has a podcast on the Investors Network, or the We Study Billionaires podcast. He's got a segment. He does a few episodes where he interviews other investors, which is very fun to listen to. So those are all the books I got for Christmas, and I'm really looking forward to diving through all of them. This Great Minds of Investing, I was not expecting it to be this big. I thought it was going to be like just a normal sized book, but this is more like a coffee table sort of thing. And then I also, my dad, sorry guys, I was hoping someone would ask me this question because I really wanted to talk about it. My dad's been sending me these Value Line things that he gets. So Value Line is basically the Value Line 600. They come out every month. And it's basically ratings and reports for stocks in tons of different industries. It's kind of like a newspaper version of a lot of similar stuff you might find on somewhere like Seeking Alpha. But for example, this is the November edition. I'm a bit behind. And in here, they'll talk about Coca-Cola, Constellation Brands, what else? DuPont, HP, HPQ, tons of different companies, both dividend payers and not. 3M, Whirlpool, and then if we go to December, we're looking at ones like Hanes Brands, which I know some of you guys have asked me about, VF Corporation, BlackRock, T. Rowe Price, Franklin Resources, Ford, American Express. So, you know, tons of different companies. So I got a lot of reading to do, but I love it. Okay, so I'm like 25 minutes behind. Definitely did not meet my objective of not getting behind in the chat. So I apologize, guys. So Ron wants to know, Ryan, do you have an opinion on closed-end funds? Thought about buying in PDI next year. You know, I don't have a good opinion on closed-end funds. I do not know a lot about them, unfortunately. But I have this book that I've talked about before. I won't get up again to get it, but it's called the Income Factory. The Income Factory by Stephen Bavaria, and it talks all about closed-end funds. So once I get caught up on all my reading, I'd like to revisit that book. I read it when I first got into investing a couple years ago, but I did not, truth be told, I did not understand a lick of it. It was way over my head. So I'm looking forward to diving back into that. I think I'll absorb more now that I know more than I did a few years ago. But yeah, so sorry guys to go on that tangent, but I was super stoked to talk about the books. Oh my gosh, Russ. What do you think about all these stocks? Dude, I think they're all great. And in fact, I think you should put $1,000 into each one. Just do it. Don't question it. Just do it. Do it. Russ in the building. Man. Wish I wasn't so behind. I probably would have been more fun to go back and forth with this guy. My goodness. I know, man. I know. Okay, let's keep going. So I'm like still 15 minutes behind. Yeah, Charles, man. See, Ryan needs a drink. I do. It's like I said at the beginning of the stream, as soon as I hop off here, I'm going to go pick up some Chipotle, come back, and then down that, have a couple margaritas, and I'll probably spend a couple hours reading tonight. And so it's usually a gamble. Like I always film my Sunday videos. I'll film my Sunday videos either on Thursday or Friday, and my goal is to have them edited and uploaded by the end of Friday, so I can basically not do anything Saturday and Sunday. Doesn't always work out that way, but this week it did. And so I have the next couple of days off, and I'm really excited just to sit around and honestly read a lot because, like you guys saw, I've got a lot of catching up to do, but I love it. I've really come to love reading. And Russ and I were talking about this just back and forth in voice message, which we send them back and forth all the time. You know, that's been I think that's one of the cool things about being an investor is the fact that it is a journey of constant evolution and constant learning. And you know, if you want to get better at investing, like you've got to like, if you want to improve your investing skill set, you've got to learn more. That's just all there is to it, about different industries, about different companies, and, you know, about different ways of valuing stocks, for example, or, you know, even looking back in time, like there's things outside of investing that you can learn and read about that you can apply to investing. And so there's just so much to learn. And I don't know, I think it's really cool. And the things that you learn when trying to learn about investing can be carried over into other aspects of your life. And you do that over a long period of time, and hopefully, you know, you'll develop into a wiser individual. I think that's the goal. And that's really why people like spending so much time listening to people like Warren and Charlie's, because those guys, they know not just about investing, but they know so much about so many different things in pursuit of learning more about investing that, you know, they're just very, very sage individuals. Let's see. So Luis wants to know, what do you think of Morgan Stanley? I need to do more research into Morgan Stanley because I don't know too much about them. But fun fact, I learned this in my House of Morgan book. So Morgan Stanley was spun off from JP Morgan back in the 1930s after the Glass-Steagall Act was passed. Glass-Steagall or Glass-Steagall? I think it's Steagall. Act was passed. And what happened was, prior to that, banks could both take in deposits, so do normal banking, and they could also issue securities. So, you know, you could basically buy and sell stocks with them, whatever. But after this Glass-Steagall Act, that wasn't the case. And so JP Morgan, the House of Morgan, had to choose what they want to be. Do they want to be a deposit bank? Do they want to be an investment bank? And so to solve this problem, they spun off Morgan Stanley into a new company, which became the investment banking side of things, with House of Morgan remaining just a deposit bank. But the two, like, technically it was still legal after this act was passed, but it was still kind of questionable. Oh, this is a really great question. And I got to go in just a couple of minutes, guys. I apologize. And I'm actually not too far behind in the chat anymore, by the way. So James wants to know, if you could choose any company that doesn't pay a dividend and get them to, like if I could get them to pay a dividend, what company would that be? Man, I've got a few in mind. I've got a couple in mind. Yeah, I've got a few in mind. So, not in any particular order, but I would say Chipotle's on there for sure. I would say Adobe, and I think Spotify. I think those are three that I like. If they paid a dividend, I would likely have them in my portfolio. Chipotle, questionable, but gosh, I just love Chipotle. Chipotle is one of those stocks where it's like, people talk about, including myself, talk about investing in what you know. Like, that's a company, a business, a restaurant I'm very familiar with. Take a sip of water. I also forgot to tell you guys, I got this flavored water here. So I'm sipping that in addition to coffee. Okay, let's go through like one or two more. Let's see. Russ is still in here. That's cool. See, excuse me. See what other stuff is around his house we can get him to show us. My goodness. Guys. Oh, Ben Franklin's The Way to Wealth is great financial reading. I'll have to check that out. Where's Peanut? Charles says something about Peanut. What's he doing? Okay, so Pizza wants to know. We'll do this really quick, and we'll call it a night. So, excuse me. Pizza says, I know I'm late, but could you please do a JEPY versus SCHD or Coca-Cola versus Pepsi? I'll do a JEPY versus SCHD. Now, Pizza, for your purposes, and Pizza's like 12 or 13 years old. He's a young investor. He's getting started early, which I'm very proud of you for, my friend. For your purposes, man, I would just go with SCHD. It's different. So SCHD is going to offer, it's going to be nice dividend. It's like 3.5% yield. Nice dividend growth as well. So it's really more dividend growth versus high dividend yield. And for someone in your position, I think SCHD is going to be a great way to go. As tempting as it is to go for that double-digit JEPY yield, man, over a long period of time, like by the time you're my age, well, actually not even that old, but 10 years from now, I guarantee your yield on cost would be higher than your dividend yield with JEPY. Your yield on cost with SCHD will be higher than your dividend yield if you went with JEPY, if that makes sense. Lucas, you must be a riot at parties, Ryan. Yeah. What did I say? I don't know. I don't remember the context of this, but what did I say here to make you say that? I'm not very fun at parties. Actually, I'm pretty fun. Never mind. I just don't go to parties a lot. Like we might be going. I don't think I'm doing anything crazy for New Year's, but the day after, some of our friends from Sacramento, where I used to live, are going to be in town, and one of them's a DJ at one of the nightclubs. He DJs at one of the nightclubs here on the Strip, and I think we're going to go out, and I'm already like, it's going to be fun. I haven't gone out in a long time. It's going to be fun, but I'm already like, oh gosh, like I'm going to be so tired, guys. And I kid you not, like I went to bed. I was asleep by 7:30 last night, which is early for me, but like 9 o'clock is not out of the norm for me to be asleep by. But yeah, I was asleep by 7:30. Fast Eddie, where will the S&P be in 1 year from today? It'll be there, man. It'll be there. That's all I can say. I don't know anything beyond that. Hunter, working hard. Actually, I missed a comment from Hunter up here earlier. So first time tuning in. I'm 18, just opened my Roth IRA. Hoping to put a good dent in the 2022 amount by April and max out 2023 by the end of next year. Man, Hunter, good for you, my friend. 18 years old, you're already starting your retirement account. I guarantee that's going to put you so far ahead of many of your peers, and you are going to be thanking yourself down the road for getting started when you are. So, my friend, congratulations. You're crushing it. Keep up the good work. And thank you so much for tuning in. We're all happy to have you here at the Dividend Happy Hour. And I think that's about it, guys. Let's see. I think that's about it. Oh, this is okay. This is a good question. Aaliyah wants to know, I'm a new sub. Do you only invest in dividend stocks? I do. I do only invest in dividend stocks. Yes. Okay, guys, I got to call it a night here. I got to go get my burrito on. But, with that, thank you guys all so much for tuning in for another Dividend Happy Hour. This is episode 31, I believe, 31 or 32. I might have it wrong in the title, but thank you guys so much for tuning in, all 126 of you who are still here. And as you know, this is the last live stream of the year. And, to close out the year, this is the last you guys are going to see me in 2022. So with that, I want to close things out just by, extending some appreciation to you guys. I want to thank you so much for the support you show to me and my channel, and have done so for these last couple of years. It's been incredible, and I'm really fortunate to have you guys having my back. So one last cheers for the end of the year. Thank you guys so much. And I hope you guys have a great weekend, a safe New Year's, safe and fun New Year's. And I will see you in 2023. Be sure to tune in to Sunday's video, guys. I have a really good portfolio update coming your way, and I don't want you to miss it. It's going out Sunday morning, same time as usual. So I will see you guys then. Happy New Year, and I'll see you in the next one. Thank you guys so much.